The New York Stock Exchange is showing signs of passing the peak of inflation. The inflation peak theory is emerging on Wall Street. This is because the upward trend in inflation indicators, which the U.S. Central Bank emphasizes, has slowed. Expectations have also grown that the Fed's austerity policy will not be further strengthened. The lifting of the lockdown in Shanghai and the passing of the peak of inflation in the U.S. are good news for the New York stock market and Bitcoin. On May 31st, Bitcoin and other virtual currencies continued to rise after breaking through the $30,000 mark even on Memorial Day. However, the Fed's FOMC said it intends to continue to raise in big steps. On May 31st, Fed Director Christopher said the big step would be continued regardless of whether inflation peaked or not. As for the extent of the Fed's future rate hikes, he said, "I will support the idea of raising rates by 50 basis points several times in the future. It will have to continue until we get close to the Fed's inflation target of 2%, he said. In the New York stock market, the analysis prevails that the Fed will adjust its pace with a 25 BP rate hikes in the third quarter after 50 BP rate hike in June and July. The U.S. Consumer Price Index has risen 8% for the past 2 months, for exceeding the Fed target. Based on the PCE standard, passive atmosphere is being detected, but the absolute level of inflation is still very high. Federal Reserve Chairman Jerome Powell said earlier that we'll continue to push for rate hikes until we see inflation going down clearly and with certainty. The New York Stock Exchange's leading index rebounded on a weekly basis for the first time in 2 months. The Dow Jones Industrial Average closed higher on a weekly basis for the first time as analysis shows that inflation had passed its peak. The Dow has risen 6.2% over the past weeks. The New York Stock Exchange rose on May 27th local time as expectations of the inflation peak passing through the slowing inflation index increased. The Dow rose for the 6th straight day. It is up 6.24% this week alone. The S&P 500 and Nasdaq were up 6.58% and 6.84% respectively. The Dow rose for the first time in 9 weeks, while the S&P 500 and Nasdaq composites reversed their gains for the first time in 8 weeks. The Dow fell for 8 straight weeks until last week, the longest decline since 1923. The market was relieved when the core personal consumption expenditure price index fell below 5% for the second straight month in April. The preferred inflation indicator of the Federal Reserve. The core PCE price index in April rose 4.9% from the same period last year, slowing down from the previous record of 5.2%. The figure was in line with analysts' expectations and fell for the second month in a row from a 40-year high of 5.3% recorded in February. Core PCE prices rose 0.3% from the previous month, maintaining the same level for 3 consecutive months. However, the skepticism remains. The main cause of inflation is external, and the Fed's other monetary policy cannot be predicted prematurely. It is pointed out that the May inflation index is still unstable. Oil prices, which fell in April compared to March, are now at all-time highs. This month, JP Morgan predicted that the average national gasoline price would rise to $6.2 in August.